right, well, welcome. This is the Patriot Radio News Hour. We're having some technical difficulties trying to get Joe ready for the show. So, Joe, if you're able to come in, but I don't hear you. So, this is June 28th. It's Tuesday. It's a fine day here in Colorado. Patriot Radio News Hour, gold and silver. You know, if you're a long-time listener, you know what this is. If you're a brand new listener, you happen to be listening for whatever reason the first time, well, you got to give us a call. You're maybe coming here because you're trying to figure out what gold and silver is and why you should be possessing it. We're going to explain some of those things. We're going to talk about the markets and what's going on. But you call us 800-951-0592 to order gold and silver. I don't know if Joe's got a special up his sleeve, but the number to call to jump on would be 800-951-0592. I now have Joe. Joe, go ahead, man.
Hey, Jason. The hole in the ceiling studios strikes again. Right now, we have the AC guys are here. One of the good and bad things about the build out that was done all these years ago. As a matter of fact, we're the original tenants here. And a lot of you will remember, we called it the hole in the ceiling studios because when we were putting the alarm in and running all the conduit, one of the guys fell through the ceiling. And I'm not kidding you, his foot got wrapped up in the wire, and you just hear this huge crashing sound, and this guy was hanging by his foot, his head about 2 inches away from smashing into the concrete floor, and he ended up, he was perfectly fine. But one of the things when they built this out here, the air conditioning unit in all of these buildings here are actually inside the inside the roof. They're we have one of those the fake ceiling with the ceiling tiles, and the AC unit's actually inside the building. It had a condensation leak overnight, and those ceiling tiles came crashing down all over the studio, of course, right where we have the studio. But we're right. The AC guy just showed up, so he's fixing it. So I'm coming through the Verto right now. It's been a crazy year. Actually, let's face it, crazy couple of years. The madness continues. Jason's getting ready to go on vacation. I'll be filling in, so I'll be doing all 3 hours for the next few days. And then on Friday, Jason and I are both going to be gone. Obviously, we're closed on 4th of July. I'll be off on Tuesday, so will Jason, and then I'll be back on Wednesday. Jason won't be back till Friday. So we got all this stuff to do, Jason. So the time, it's about right. That's about the right timing.
Yeah, here's the thing, Joe. Is it better for you for things to go wrong when you're gone because it proves you're needed, or is it better for things to go right because you run a tight ship? Which way do you want it?
Hey, let me tell you right now, you're right about that. The best case scenario is all of this has happened while we're still here. So
right.
We can get it all handled, and it's definitely been quite the interesting morning when you walk in and your ceiling's missing. It's all over the studio too, all over the radio equipment. One of the tiles landed on my monitor where I have all the gold pricing and all that. It broke the monitor. I mean, it's just been a great Tuesday morning. The good news is, like I said, it looks like we're going to have this thing fixed pretty quickly, and everything else can be replaced.
All right. Well, yeah, it was just I really am going to shut everything off when I leave because I don't want to hear about this when I'm gone. I just want to because I remember
the number you have dialed has been disconnected or is no longer in service.
The first year you bought it, I had to constantly tell you the things that weren't fixed that we were working on and the things that were breaking that we had just fixed. So it's I can't handle it. I'm gonna try to. If I'm gonna be gone, I'm gonna be gone. So, and I tried to tell all the customers out there. And I know there's gonna be a couple of that's like I didn't know, but I've got Sonia here. She'll tell everybody. Well, Jason tries.
Just a real quick announcement. The Colorado Patriot office will be closed starting tomorrow through next Thursday. The radio station itself will be open. Sonia's going to be there. Freddie, we'll have people there. But the Patriot office. So if you're wanting to pick up gold or you want to sell gold, essentially from Wednesday tomorrow through next Thursday, there will be no gold but being picked up, sold, bought, what have you. You can place orders. You can always sell and lock in prices by calling the Arizona office, by calling the 800 number. But the physical location will be closed while Jason's on vacation. So just to put that out there.
Essentially, I won't probably be even taking appointments till July 11th, which will be the following Monday, because really Friday is I'm going to have stacks of things to work on Friday. I'm just coming in Friday just to catch up on the radio station stuff, and then probably really the gold and silver appointments will start back up July 11th, which is a Monday. There's just going to be a lot. No matter what I do, there's going to be a lot when I get back.
Yeah, there you go. 800-951-0592. Not a lot of economic data out today. There was some, consumer confidence was another bad number, I guess, for lack of a better term. Home prices, Case Shiller was out. Of course, that's always old data. So this was, I want to say, April or May data showing home prices, as we know, were still rising. I think we got crude oil, which we had that sell-off last week. 800-951-0592, Patriot Radio News Hour, Joe and Jason. Here's the good news. I got a hold of my son. Joey's going to be joining us here in a little bit to talk about the markets, obviously making sure wealth preservation, Jason, is going to be the key, especially for the next couple of years. Wall Street right now. Here's the sad part. We've got another one of these dead cat bounces. This is your pension funds, your 401ks. It's the end of the quarter. So all that money, they've got to, just because kind of how it works, you check these boxes once a year, all this money getting put into the market. And I got this, well, the realities are this. All the corporate downgrades, we're going to see a ton of them coming in July, in August, and all this new money that got put into work, Jason, it's going to be wiped away, plus a lot more.
That's right, Joe. That's what happens, and people don't realize that in 2008, how 40% of the money got wiped out. That's why things were crashing and burning so badly. Is you had this short period of time. I think it was 16 months where 40% of the money was wiped out. Even during the Depression, I think it was, I forget how many years it was that they wiped out 33%. I think it was 4 years they wiped out 33% of the money. Then in 2008, it was just a few months, wiped out 40%. So what's going to happen this time, Joe?
Yeah, that's the thing, right? So, and as to Jason, what he's letting people know is when you have these events, the wipeout gets bigger and bigger. Yesterday, we were talking about the derivatives and the huge onloading of derivatives from these major institutions. We were talking about J.P. Morgan yesterday. Just in the first quarter of this year, $15 trillion. Almost, think about this, about 70% of the entire GDP of the United States was added on to J.P. Morgan's balance sheet in 90 days at the beginning of this year. And Jason, this is kind of the big problem. I did find out some information, so these stress tests, remember they run these stress tests to try to give us the illusion that your money's safe, because it's not. Ready for the worst case scenario? This is what a joke it is. The worst case scenario was across all the major financial institutions, it would be about $600 billion in losses. And this is why it's such a joke, because J.P. Morgan by themselves has $60 trillion of derivatives, and $600 billion is like 1%. That would be like saying, okay, the worst case scenario is 1% of people stop paying their debts. It's absolutely asinine. And even when you go back to '08, right, obviously we had a situation in housing where about 5% of people weren't paying their mortgages, and we saw the damage that was done then. It's just a big game that they like to play, and they go through this exercise to say that these banks are healthy, and of course, what does it allow these banks to do? It allows them to sell their stock. It allows them to pay a higher dividend, when right now everybody knows banks should be preserving capital, Jason, not wasting it.
Well, Joe, let's go back to my example of, I think it took so many months for the Depression to lose 33% of the value. I think it was 4 years, and then 5 years, something like that. And then it took only 16 months to lose 40% of all the money in the American system for the housing crash. But this is, see, I think the reason that they think they can say these things, Joe, is that we're in a massive inflationary situation. You know, the value of everything will drop 40%, but if your stock market is still sitting at 31,000 or 29,000, and inflation's up 50%, goes up 60%, maybe we even have 80% or 100% inflation over a course of a couple of years, that's the same thing as destroying money. It's just not going to look like it because, well, the stock market's still sitting at 29,000. But if you have 50% inflation and the stock market goes sideways and housing goes sideways, that's a massive crash. People don't really get this, Joe. It's crashing. No matter how you look at it, it's going to crash one way or another. And I have a feeling if the markets for some reason are able to stay up, Joe, the inflation is going to fly like nothing we've ever seen. And that's destruction of money, because if you can't buy, a loaf of bread's $2, now a loaf of bread's $20, I think you've destroyed a lot of money, Joe.
Yeah, it's going to be very, very interesting when we get all of the downgrades that are coming, because the inflation starting to erode the profits of Wall Street. I think Jason's scenario, that might be the best case scenario for Wall Street. I don't think that they get that. I don't even think they get anywhere close to that. I think we're going to see another major wipeout, because the bottom line is a lot of these zombie companies that have been around for the last 20 or 30 years, as long as the Fed is going to stick to rate hike policies, they're not going to be able to borrow cheap money and continue to survive out there. So it's going to be a really, I think this is a whole new scenario, similar, right? We go back to the Great Depression, you go back to the Great Recession. These are going to be similar in the wiping out of money. But the difference, to Jason's point, the difference this time is going to be, what is the effect of inflation and how is that going to react with all of the rest of these things? And it's going to be interesting to watch all of this play out. You know, we're watching crude oil up again today, back to 112, Brent crude's 117, and rising as China's economy continues to really reopen itself. And of course, we got the 4th of July holiday. I think there's going to be big gasoline demand. And once again, I think we're setting ourselves up for gas prices, which maybe they flattened out. Some places in Phoenix, they've gone down maybe 5 cents a gallon. Unfortunately, I think it's going to be short-lived, Jason. I think we're going to see the next spike in gasoline prices after the 4th of July holiday.
Yeah, I think that's coming. I don't think anybody escapes $6 a gallon in the country. I don't think anybody escapes that. And then the question will be, where above that are you? Is California 9, Arizona's 8, Colorado 7? Is that where we end up maybe before it starts to finally stop? Or is this just a progressive problem that goes on possibly years, Joe? Why do I get the feeling in 2023 it's just going to progressively get worse? when this inflation, the inflation was caused by the money printing in 2020 and the coronavirus pandemic. So in my little neck of the woods, I bought a house towards the latter stages of 2020, and the houses were being built like you normally see. Here's a house here, there's a house there. There was a lot of building, but it was a normal neighborhood building cycle. But then when February of 2021 hit, just the building went berserk. I mean, it went into hyperdrive. I'd never seen building as fast as I seen in that neighborhood because I was there for months watching normal building. And Joe, the market was, just take the Dow for instance. It was about in early February, it was about 31,000 plus. Right now, it's sitting at 31,000 plus. Why do I get the feeling that this is markets crashing, and it just doesn't look familiar because the inflation just skews everything. Because I'll tell you right now, things seem a lot worse in 2022 than they did in 2021, Joe.
Yeah, well, yeah, that's a great point. And then today, I don't know if you saw the news. So one of the great things that they did with coronavirus is they funneled just truckloads of money to blue states, primarily California, Illinois, New York, New Jersey, all these states with these horrible pension problems, so they could paper over it. Today, Gavin Newsom says he's going to send $1,050 to Californian families to help them offset the price of inflation. Somebody needs to teach these people economics. He's actually going to make the problem worse, Jason, not better.
He's depending on the federal government to bail him out as he's bailing out his people. He thinks he's got an in with the federal government. He thinks he could probably go get a loan with the federal government because the federal government's going to get it from the Fed, Joe. I think he's like, you know what, I'm going to try to get ours first. That's what it sounds like he's doing. Because I think that a lot more states are going to be right behind him.
It could very well be. And of course, sending every Californian $1,000, what's going to happen? Well, they're going to spend it. They're going to buy more gas. They're going to go out and maybe get the boat out, whatever it may be. All it's going to do is make the inflation problem that much worse. And it's these terrible policies. And again, you know what, though? We're really conditioned, aren't we now, to where, because if California's done it, how long until other states announce the same thing? Where anytime there's a problem, Jason, the first answer is government wants to hand people money.
That's correct, and it's disastrous, the consequences. And the consequences always kick in a little afterwards, and then you kind of forget the $1,000 you got, and then you're looking at these, they'll be looking at $9 a gallon gas after this because their gas situation is abysmal.
Well, then they're going to be right, hey, well, where's my next check? It's even more expensive, right? Give me $2,000.
That's not going to be enough. That's not going to be enough. That's the whole point. It's not going to be enough. There is no number that's enough, and that's where hyperinflation comes in. Hyperinflation is the ultimate definition of not enough, because there is never enough in hyperinflation, Joe.
I do want to point out the BRICS nation, Brazil, Russia, India, China, and South Africa, excuse me. They just had a big meeting, and they were all there. Think about we couldn't even have the meeting of the Americas because half the country said, "Hey, if you're not going to invite all of us, we're not coming." Everybody was there, shaking hands and photographing with each other. It has been a dramatic change in the world. And I pointed out because, yesterday we told you how the United States prevented Russia from making a debt payment, which, think about the idiocracy of that. Then they met with the G7, right? So that's that's Japan and France and Germany and England, right? Having this meeting and they were talking, Jason, about trying to once again restrict how much oil Russia could sell out there. And it's almost like they're deliberately trying to make this problem worse.
Over the past weekend, Russia just sold a whole bunch of cheap oil to India. So Russia is still selling their oil, Joe, and India got some cheap oil. I bet the gas prices are a little better there in India now. Yeah,
in India, you're looking when we say cheap. we're probably looking at somewhere around $90 a barrel for Russian oil. Because you think about Brent crude, which is what India and China buy, that's $118 right now. They're probably buying it for, $85 or $90.
Yep.
It's incredible. Russian revenue, believe it or not, Russian revenue has actually increased since the invasion of Ukraine. It's actually had, this is how brilliant we are. It's actually had the opposite effect.
Exactly, Joe, exactly. Real things have real value. Money is just an idea, and ideas can be corrupted, changed, or destroyed. And we're starting to see the Federal Reserve note show a lot of weakness. Now it's been stronger since this war started, but it's just all a shell game. And Russia's showing that, hey, when you deal with things and you actually deal with commodities and things that actually matter, when nations' fiat currency start to show weakness, everybody scrambles for what, do you have enough food? Do you have enough fertilizer? Do you have enough energy? That's going to continue. Joe, how many years are we going to be talking about that? I have a feeling a couple of years from now, we're still going to be talking about the cost of energy, the cost of food, and all this stuff.
When we get back, we're going to talk about dollar weakness. Because if you look at Wall Street, you'd say, wait a minute, the dollar's pretty strong. But is it really? We'll talk about that next. Hey, welcome back. 800-951-0592. Joe and Jason here. Crazy day. I'm actually doing the show in the shipping room right now. The Hole in the Ceiling Studios is back. We got the AC guys up in the ceiling working on some AC unit issues. But the show must go on. And Jason, before the break, you're talking about dollar weakness. This isn't what a lot of people think, because if you go to Wall Street right now and you look at the dollar index, and I really liken it to like the paper price for oil or gas or silver or gold or tin or aluminum, pretty much all the commodities, almost worthless. But it shows the dollar at the strongest levels in years right now. And of course, it's strong against the British pound, and it's strong against the euro and the Japanese yen. By the way, Japanese yen falling out of bed again today, really starting to lose value as now the Japanese central bank. This is how idiotic and why they need the reset that's coming. Why they need this digital currency. The Japanese central bank, it's official now, owns more than 50% of all Japanese treasuries. When you think about our central bank right now, they're still, they probably own about 25, not quite 25% of all of our treasuries, at least right now. But the big thing that they're not telling you about is what's been going on in these bond auctions. So think about it. Every day, twice a day, we have bond auctions because we've got to roll our debt. We've got to first we've got to add new debt, right? And then we've got to roll over the old debt. Well, one of the things that's been happening as Japan continues to struggle, by the way, the Japanese, the largest holder of U.S. treasuries, they're starting to have to sell. China's been selling, and over the last couple of weeks now, all of a sudden, the foreign demand for U.S. debt, Jason, has really started to fall off, and we're starting to get, they call them tails in these auctions. The longer the tail, the worse the auction was, and we're starting to see that happening, and already just the debt now with these higher interest rates, we're setting records now every month for the amount of money spent on just making interest payments on our debt, and right now a lot of foreigners, because as you know, when bond yields rise, okay, and that's what we're having right now. Think about interest rates. Interest rates are rising. that actually makes the bonds worth less. So any bonds you're holding at the lower rates are not nearly as attractive as the higher rates. And Jason, everyone and their mother thinks that the Fed's going to raise another 75 basis points at the next meeting. So right now, not a lot of dollar buying happening in the bond markets.
That's right, Joe. And the last I remembered, the Japanese government also owns a significant part of their stock market too, right? I mean, Japan really is a tipping point, and with the rising interest rates, and the funny thing is, people that love the stock market, people that love bonds and treasury bonds, and they like all these financial instruments that seem to all be having a lot of stress. That's a lot of these people. That's all they know, Joe. That's all they've been taught. That it's just these instruments. They don't think of anything outside of that. Commodities is foreign and weird to them. Buying anything physical is disgusting to them. And if it ain't dollars, treasuries, if it ain't stocks and paper markets, they don't know where to go, Joe. That's why the housing crash was so severe, because that's what the thinking was back then. It's like, well, it's got to be one of these things that's going to make me money. And then at some point, sometimes they all don't make you money, Joe. Sometimes they all lose at the same time.
Well, yeah, sometimes the best strategy is preserving wealth versus trying to make. That's what made Bitcoin so attractive. Everyone, hey, I can be a millionaire overnight. There's I don't even know, 40, 50, 100, maybe 1,000 coins that trade for less than a penny, right? So right. You throw $1,000 into something that's 1/100th of a penny, and hope it goes to 1/10 of a penny to become rich. That worked for a little while until it didn't. Remember the meme stocks like AMC and all that stuff, and we did a lot with the all of the movements out there where they were going after these hedge funds and blowing them up, and those are actually early signs that there's problems that are on the horizon. And now we're starting to see that these problems, right? Jamie Dimon called it a storm clouds, and then within a matter of like a week, he said, well, whoops, it's a hurricane. And I think this is what we're looking at. And by the way, because we're coming into hurricane season, we could see some very, very big, sudden spikes in energy prices. Depends. These hurricanes, they're hard to predict. We never know. But if we get these hurricanes in the wrong places, you look at, the off of Texas and Louisiana, where a lot of these refineries are, Jason, that could be recipes where, certain parts of the country could all of a sudden see, heaven forbid it, $10 gas.
That's right, Joe. It could happen very, very quickly. And we were talking, just before you got into the hurricanes about these financial instruments. Joey is ready to go anytime you want to get him on the air. We're hitting this commercial break here in a minute, but we may have a few bits of information from Joey, I guess, huh?
Yeah, we'll get to Joey. Matter of fact, Joey, hang with us. We'll bring Joey in on the next segment, because I know that's what they've been talking about there. Joey, obviously, at Northwestern Mutual, everything from life insurance, long-term care, I mean, you name all that stuff, plus the investment side. If anyone's going to help you preserve this, whatever you don't have in the gold and silver market, Joey's going to be doing that. And I think to Jason's point, the big whacks happen very quickly, in a matter of months and really days. There's going to be days where all of a sudden, hey, Wall Street just lost 5%. That's a lot to lose in a single day. So we're going to have Joey on in the next segment, and he's going to help everybody out. Don't touch that dial. Patriot Radio News Hour. We'll be back right after the break. Welcome back, Joe and Jason, Patriot Radio News Hour, and we are very fortunate. We have my son with us this morning. Joey's with us, and I've been asking him for the last several weeks, when are you going to be on? When are you going to be on? And he's like, Dad, I'm busy. I got stuff going on. But today he's only going to be on here for the last couple of segments because he's got a bunch of meetings going on. But Joey, thanks for taking the time. I know you've been really busy. You got 4th of July weekend. I know this. I'll let everyone know. By the way, he's flying to Vegas to watch the UFC fights and then flying home. So he's got a busy weekend. But you're actually taking the red eye because you got meetings Tuesday morning.
A quick turnaround. Oh, can you guys hear me?
Yep.
No, it's going to be a very quick turnaround going to Vegas and doing the UFC fights. A buddy hooked it up with some free tickets and hotel rooms, so I had to take advantage of that. But yeah, like you said, going to take the red eye midnight morning on the 4th of July, and that way I can do some prepping and get prepared for my meetings on Tuesday. The grind just doesn't stop over here. Got to make sure we're always prepared and doing right by my clients at all times.
Yeah, and right now it's a much harder thing to do. Obviously, with the markets where they're at, you guys have been saying this for a while now, focusing really on preserving wealth over the short term, playing a little more defense than offense. But you got to have if you don't have a person looking out for your wealth, if your financial planner hasn't been calling you and talking to you and readjusting, then you're open to the slaughter.
Yeah, I mean, just think about yourself and where you're at and your time horizons. You know, your late 40s, early 50s, and you're getting ready for retirement. Now is not the time to be playing offense on that football field. It's time to reassess the defense, get the right subs in, and make sure that, hey, we're protecting ourselves, protecting the quarterback, and making sure that our money's secured in retirement. That way we're not losing 20% of our money before we even get there, right? That's the last thing we want to do. And every person's different. Some people like to take on risk. Some people don't. And it's just making sure that we're properly allocated. I can't tell you how many times I've spoken with callers from the station, and their portfolio is just way too aggressive, especially at the age of 50. To be in 100% equities is crazy. So I just encourage everyone listening right now, never hurts to hop on a phone call and take 30 minutes of your time to figure out what exactly is going on with your money and what we could be doing, to help you out and help, like you said, preserve your wealth. That's the biggest thing we need to do, especially in the time of down markets. We're not going to be making the 10%, 20% gains in times like this, but it's making sure we defend ourselves and then we set ourselves up for when the offense needs to come and play.
That's right, and that's the other big part of it, and that's the best part of why having someone like you in your corner. Hey, we play defense when we need to play defense. When the time is right, hey, we'll go back on offense down the road.
And right now, too many people are stuck in offense. This isn't, 2020 COVID where you were making 100% gains on every trade, right? It's not the GameStop, the Dogecoin, or whatever that may be. Like, big tech is down. It's a time for defense, and we can talk about getting aggressive and playing some offense a year or two down the road when the market recovers. But for now, we just need to make sure we're preserving our wealth and we're not giving away our dollars that we worked hard for, right?
Yeah, exactly right. How do people get a hold of you? Give out your number. We'll have you give it out a couple more times between now and the end of the program.
Yeah, my cell. It's 602-909-9048. Shoot me a call or text if I don't answer. I'm probably in a meeting, and I'll get back to you right after that. I'm very good at responding in the same day. But yeah, shoot me a call, even if it's just a question. Would love to talk and chat for a bit and see if I could help in any way. It's all about establishing a relationship, in my opinion.
Yeah, absolutely. It really is about relationships, and right now, too many people unfortunately don't have that relationship. They signed up for something, 4, 5, 10, 15 years ago. Nobody really communicates with them, and unfortunately, they become very vulnerable when these crashes happen. and they happen really quickly, even on days, here's the hard part, we're talking about a dead cat bounce today, but that doesn't actually mean a lot of people's portfolios are doing better because of the way they're allocated.
Market too, it looked like it was going to go up and went back down, and it's crazy. People don't know what's going on with your money. You tend to forget about it, and maybe forget about it for a week, for a month, and all of a sudden you're down 15-20%, and the market's up 2%. And you're like, how is that even possible? Well, it's because the people who you're working with, one, probably aren't looking at your portfolio, or two, they probably just haven't called you, checked in with you to make any changes. And if you haven't received a call this year or two, I think that is a problem. These are crazy times, and especially, I know most listeners here are older, and if you're not getting a call for your money and to reallocate your investments, something is wrong. There's something dead in the water. And I'm always here. You can send me statements. I'll look over it for you. I'll tell you what's going on. If they won't do it, so that's always an option.
You also you do like Roth IRAs, you do all that other stuff. If people, maybe they're like me, a small business owner, they don't have access to 401ks, you do all of that stuff as well?
All of that. We do the Roth vehicles, the IRA vehicles. Some people I'm starting with that are younger, we contribute like $100 a month into a brokerage account just to build that up. Investments can be small, but it's something we should build up, especially now in these downtime.
We're going to be back with Joey. One final segment before we head out of here. And we got a great half-empty cup of Joe coming as well. 800-951-0592. Really quickly, $20 gold pieces. They're on sale today. Not as good as the day before. $21.25 on U.S. $20 gold pieces at 800-951-0592. We've got my son Joey with us. One of the things I learned, because let's face it, I don't really do a lot of Wall Street because I don't trust the pinstripe bandit. But part of why Joey is where he's at, because we've always thought this is how we were going to do things, and Joey's becoming a big part of the radio station, and now we've got an advisor out there that's going to look after our other money that isn't going to tell us what, to sell our gold and do all those things and understands our point of view on things. But one of the things I learned, Joey, is, a lot of people, which is what I thought, hey, once you sign up with this financial guy, he's going to take care of your money, and he's doing all this stuff and not even checking with you. It doesn't work that way. He can't make changes to your portfolio without talking to you. Isn't that right?
That is right. You can't necessarily change someone's whole portfolio without, someone's consent. It's their money, right? But the cool thing with what we do is we always call, we always check in. But if you're part of our signature portfolio, which is a minimum of $20,000, that's automatically rebalanced without a phone call every quarter, right? But I'm making sure to stay on top of it with all my clients who aren't in that range yet. Hey, I'm calling you every 6 months. Going to give you a lowdown of what I think going on with the market, where are we at. But you're always allowed to check your account with us. There's an internet, you can log in with your information, see what's going on. And I can also provide you with weekly updates through a newsletter that we have. We really just give this personalized approach, and I'm not here saying that I'm going to give you the best returns ever or things like that. I'm here saying I'm going to preserve your wealth and make sure that we're not losing your money that you worked hard for.
And then what about, you also do the insurance side? We got to mention that, because I think that's probably one of the things that you realize in talking to a lot of people is they didn't have enough insurance. And then once you get to a point, you're almost too old, it's too expensive. So it's really important, especially in your younger guys and gals out there, you're in your 30s, 40s, maybe even 50, to get that insurance side of it done as well.
Very important. The insurance side makes sure, hey, all of our debts are covered. If we passed away, unfortunately, those will get paid off. Our kids and our families wouldn't have to pay off those debts. It also makes sure that we build up, a bucket of money that we can access tax-free. Build up this cash value. It takes a good 15 years to build, but boy, is it an awesome thing when you're in retirement and the market is down, and you don't have to withdraw from your 401ks and your Roth IRAs and things like that. It's simply, you know, just the best market hedge in my opinion, and it allows people to really experience wealth and be safe during retirement, not freaking out worrying like, hey, do I have to be a Walmart greeter, you know, to get by every month? It's just another bucket of money, just like the gold and silver you carry. It's reliable. It's something, you know, it's guaranteed to stay. It's not going to go away anytime soon.
You mentioned something that I always like, which, by the way, Joey's talking is exactly things that I've done with him, tax-free.
Tax-free. Your 401ks, you're going to withdraw those and you're going to get taxes on it, right? It's making sure that you can withdraw from a bucket of money and not pay any taxes towards it. It just makes it play the
Joey,
tax
give your
game
number out real
really
quick.
602-909-9048. Sorry I have to go. It was great talking with all of you.